In India, there are several ways to save tax and reduce your taxable income, thereby reducing your tax liability. These methods can help you save tax in the financial year 2023. Invest in tax-saving instruments. One of the most common ways to save tax in India is by investing in tax-saving instruments such as Public Provident Fund, PPF, National Savings Certificate, NSC, Equity-Linked Savings Scheme, ELSS, etc. Under Section 80C of the Income Tax Act, 1961, you can claim deductions of up to 1.5 lakhs rupees for investments made in these instruments. Use tax exemptions and deductions. The Income Tax Act provides several exemptions and deductions that can be claimed to reduce taxable income. These include deductions for investments in tax-saving instruments, medical insurance premium, home loan principal repayment, tuition fees for children's education, donations made to charitable institutions, and more. House rent allowance, H-R-A. If you are living in a rented house, you can claim H-R-A exemption. The amount of exemption depends on your salary, rent paid, and location of the rented house. You can claim a deduction for the least of the following three: actual H-R-A received, 40% of your basic salary, or rent paid minus 10% of your basic salary. Tax benefits on home loan. If you have taken a home loan, you can claim a deduction for the interest paid on the loan under Section 24 of the Income Tax Act. The maximum deduction allowed is 2 lakhs rupees for a self-occupied property and up to 2.5 lakhs rupees for a let-out property. National Pensions Scheme NPS contributions made to the National Pensions Scheme NPS are eligible for deduction under Section 80 CCD. The maximum deduction allowed is 10% of your basic salary, 2.5 lakhs rupees in case of self-employed individuals. Avoid cash transactions. To avoid scrutiny by the tax authorities, it is important to avoid making large cash transactions. Maintaining proper documentation of all transactions and investments is also necessary. It's important to note that tax laws are subject to change, and it's always best to consult with a tax professional for personalized advice based on your specific financial situation. In conclusion, by taking advantage of the exemptions, deductions, and investment opportunities available under the Income Tax Act, you can save tax and reduce your tax liability in the financial year 2023.